We think just having any exposure to innovation is crucial because of, where these technologies are going and how disruptive they are to some of these, backward looking indices like the S&P 500. Hi, I'm Ren Leggi, Client Portfolio Manager with ARK Invest. On this season of The Switch, we're going to address the mechanics of exchange-traded funds. As always, we'll be joined by ETF Trends to facilitate the discussion and make sure that we don't leave anything unanswered. So let's get the conversation started with the capacity for innovation.
Hey, Ren, I want to hit you right between the eyes, and a lot of your shareholders probably thinking the same thing. ARK as a whole has gotten really big. I mean, you're in the $50 billion range as far as the amount of money that you're managing. And you've got high conviction with a select few group of stocks. Is there a concern that you might run out of space or you might run out of companies to invest in?
So we are not concerned at all. And that's because you have to look at the universe of these innovative stocks, right? Right now, we're sizing it at roughly $15 trillion for the entire market cap of these related to the 5 innovation platforms that we invest in. So energy storage, robotics, genome sequencing, blockchain technology, and artificial intelligence. Now, if you think about where these 5 platforms are going, we think they're going to create roughly $75 trillion worth of business value and wealth creation over the next 10 years. When you think about that, that universe, it's much larger than what everyone is anticipating, right? You think about the global equity market cap today, I think it's approaching 100 trillion. So this is going to be 75 trillion by 2030. So from our perspective, we have the ability to go anywhere from a geographic standpoint. We can go any sector, industry, and we can go any market cap. And so from our perspective, we have a lot of opportunities, and there's so many innovative stocks out there. We're trying to capture and identify those select group of winners. But, at 80 billion in assets, we're still a very small piece of that overall pie.
We talked in a previous episode about how the capital markets have really changed, and that era of sort of a small, scrappy company going public really early to raise money to grow isn't really what we see anymore. A lot of the SPACs that some of these innovative companies are coming to market through, they're not exactly coming in small cap. They're coming in with a lot of money. How do you guys think about that? Do you think about capitalization when you're looking down into the innovation spectrum and really trying to avoid some of the smaller and micro cap companies? Or are you just first principles only looking at addressable markets and how well that company is going to hit it?
No, exactly. And that's a great point, right? Because a lot of these private companies have been staying private longer, now when now that they have the opportunity to go public and the SPAC vehicle is kind of an attractive opportunity, for a lot of the management companies of these firms, they can go public without the distraction of the IPO process. And they are going public at multi-billion-dollar valuations, right? So we don't look at these micro-cap companies. They tend to be binary, right? Very early stage. But some of these others, at multi-billion-dollar valuations, could be attractive. And from our perspective, it's not about market cap, right? We go where the innovation takes us. If we're seeing a lot of opportunities in the SPAC space, and they're 2-3 billion, they may make their way into the portfolio. Certainly, we would look at liquidity aspect, right? And so, for the most part, when you're looking at companies that are going public, at 3-4 billion, it's not really that much of an issue. And we're seeing it depends on the technology too, right? So we see that being the case, having a smaller cap bias in the genomic space, whereas in fintech or autonomous technologies and robotics, we're seeing a much larger cap bias. The beauty, at least for our main strategy, is that we cut across all of those areas, and we can, the average market cap of the entire portfolio is, in the mid to large cap space.
We don't think about indexing and ARK together. They tend not to be within the same paragraph. But I understand through MSCI, that traditional, well-respected indexing firm, that there's this innovation index. There's 1,000 companies in this index. And that's kind of a feeding ground for you folks. Can you talk about that?
That's correct. The MSCI has launched a suite of innovation-focused indices. And the main index, I think, is holding just over 500 names. And when you look at the global market cap of that index, it's roughly just shy of 15 trillion, which is very similar to what our forecast from our research process informed us of what the total market cap is for innovative companies. So that's great that we came at it from different angles and we got to very close, almost the same exact number. And that just really speaks to, the size of the opportunity here. Now, we don't manage to that index. There's actually a lot of names that we own in our ETFs that aren't held by one of those MSCI innovation indices. So it is something, we put out there. Some investors want to gain more passive exposure to innovation, and that's fine. We think just having any exposure to innovation is crucial because of, where these technologies are going and how disruptive they are to some of these, backward-looking indices like the S&P 500.
I mean, you guys have been talking about innovation for a long time. Kathy's been talking about innovation for decades, at various firms. But now you've got so many folks out there competing, right? There's so many folks out there sort of jumping on the innovation bandwagon. A lot of the companies that you guys have been talking about are now showing up in all sorts of other portfolios that are passively managed. Is that an opportunity? Is that a threat? Do you worry at all about the people starting to passively index your active strategies?
No, we don't see that as a threat. We encourage competition, right? That only helps validate the space. Our goal is to, make investors informed about making a strategic allocation to innovation, right? Because these opportunities are so large, we think you really should have some exposure to it. We think that exposure should be pretty significant in your global equity sleeve of your portfolio. So having more managers come into the space is not a negative, right? It just further validates, what we've been saying, as this is an attractive investment opportunity. Thanks, Dave and Tom. It's been a pleasure. I will catch you on the next episode of The Switch.
Cheers.
Thanks, Ren.